A sea of red, as had been expected. Commodity prices, meanwhile, elevated. Is this a super cycle of commodities which is still intact? We're going to be talking to one of the best gurus out there when it comes to commodities, Jim Rogers, live on ET Now. Jim, good morning. Thank you so much for joining us. I don't even know where to begin, so let's begin by getting your opening comments. The geopolitical tension, the war of sorts that we're seeing, smoke from the largest nuclear reactor in Europe, the markets in a complete tailspin. How is Jim Rogers navigating through all of this news?
I'm delighted to be on ET Now. As you know, I'm a big fan, but you also know that I've been saying we should buy commodities for the last few months longer because there's been a lot of money printing. Whenever there's money printing, prices go higher, and especially if you have war. I mean, I don't like making money from war, but I'd rather make money than lose it, and I'm going to own commodities when the war stops as well, because there's going to be more inflation and more commodity price rises.
Okay, so let's go one by one then, Jim, shall we? You, of course, have been saying for a long time to buy commodities, and I'll begin with the one commodity that is crude oil, right? Crude is on the boil. Levels we've not seen since 2008. It, of course, impacts India a lot. We're one of the largest energy consumers in the world, one of the largest importers of crude oil as well. So first up, Jim Rogers, crude oil. We've hit the triple-digit mark. The question is it sustainable? Is it going to go up even more?
Well, known reserves of crude oil continue to decline, so I'm not selling my energy, my crude oil anyway, because I know the reserves are declining. It does not mean there won't be corrections along the way. There always are. We had a big correction a few years ago because of, fracking. Well, fracking turned out to be a bubble, but we still have fracking and we still have energy. But known reserves continue to decline. I don't like to buy when you have something going straight up like the last week, but when things calm down again, I will buy more energy.
So you are buying more energy even when there is a rhetoric towards green energy. That I'll come to in just a bit. You may not be selling whatever you're holding when it comes to energy, but I think this is what our viewers will want to know. $115 done, $119 a barrel almost taken out. Can it go to $147?
Well, you know the answer to that. Watch ET Now, and you'll get the answer. They'll tell you when to buy. I let the market. When I see despair and unhappiness in a market, I get interested. There is no despair right now in the energy market or in the commodities markets. But when the correction comes and when the people are despondent again, then I will buy more energy and more commodities. Let me just say again, there's a huge amount of money printing going on in the world, and there are big changes taking place. For instance, we're going to have electric vehicles. Well, electric vehicles use 3 or 4 times as much copper as a petrol vehicle. So we have supply-demand shortages developing in commodities as well. So I am not selling. You talk about basic changes and money printing and then war or whatever, then that's what I own.
Jim Rogers, for the last couple of many months, most experts have been divided. Inflation, is it transitionary? Is it structural? Most experts are now saying this is going to be a matter of a few weeks, if not a couple of months. But if I look at food inflation, let's look at agriculture. Look at wheat, the way it has moved up, all-time high, higher by 67% year to date. Corn is higher by 30%. Soybeans higher by 28%. Cotton is higher by 10%. If you were to talk about food inflation in particular, plus the container shortage that we're now seeing in Black Sea, the global supply disruptions. Where do you see inflation, and how is one saying that this is only going to be for a couple of weeks or a couple of months?
Aisha, as long as politicians and bureaucrats tell me there's no inflation, I will continue to know there's going to be inflation. These guys never get it right. You in India had a great central banker a few years ago, but very few central bankers know what they're talking about. And so I own commodities. I know prices are going to go higher, not every week, but I know that all of this money printing and shortages of supply will continue to make commodities a good place to be. Do I like it? No, but I do like protecting myself, and I have to.
Okay, so that's how you're protecting yourself, and you're doing it by with the commodities play. Jim Rogers, so while you're saying the politicians might be wrong, it's the politicians, the central banks, that'll also be deciding as far as the printing of money goes, right? We've seen the testimony of the US Fed chair. How are you reading all of those statements? What are the markets now anticipating? A few days ago, we were even talking about 7 rate hikes.
Well, no, I'm not worried about the 7 rate hikes, not for a while, because now the central bankers are scared because of the war. So that's one reason that I suspect we're going to have a big rally before too much longer, because now the markets say, well, the central banks are not going to raise interest rates a lot. So when things calm down again, the markets calm down again, they're going to be a very, very big rally, because now people are not worried about central banks. Do I like it? No. But if the big rally comes, which I expect, I hope I will continue to make money.
Jim, hi there. Morning. Avan joining in as well, and wanted to know what the outlook is when it comes to the defensive tilt in the market, because generally when we see acute volatility in the equity markets, one tends to look towards the defensives to cushion the volatility. What's the sense that you're getting over there?
Well, again, my main play, my main focus are commodities, because that's where the action will continue to be, in my view. But of course, if you know some defensive plays that are going to benefit, sure, by all means, buy them and then send me an email so I can look at them too.
Fair enough. Jim, wanted to get in your take as to what the outlook is when it comes to gold as well as silver prices. Owing to the way we've seen the global tensions as well escalating, gold prices too have been on the rise of late. Is that a good bet to hedge the volatility too?
India knows more about gold and silver than anybody in the world. You know that. I think you all own more gold and silver than any of the rest of us. So I should ask you. But yes, I am going to buy more silver. Not now, because silver is going straight up. But when silver and gold correct, I'm going to buy more of both, because sometime in the next few years, we're going to have serious problems in the world financial markets and money markets. And whenever that happens, people have always bought gold and silver. I'm an old peasant, and us peasants know that we better own some gold and silver when things go wrong.
And just to understand, as a portfolio allocation, do you believe at a time like this, the commodities space would be the best place to be in?
In my view, yes. But again, if you don't know about commodities, please don't buy them. But I will buy more and more commodities, because I can see that we're going to have inflation, we're going to have money printing, we have supply shortages, so I plan to buy more. I will probably buy more commodities than anything else in the next year or two.
Jim, can I ask you that when you buy more of these commodities, which ones?
Well, I mentioned gold and silver. I like to buy the ETFs because I'm lazy, but also because many studies have shown that if you buy the index, you're going to do better than most people. So I will buy commodity indexes, things like RJA on the New York Stock Exchange. It's an agricultural index. Those things, I hope, will do better than individual commodities. They usually do.
So if I could zoom out, and like I said in my introduction when we began this interview, that you're a commodities guru, one of the most respected voices when it's out there. When we zoom out, do you think this is going to be a case as well where we're going to see cash being taken off the table when it comes to equities and being put into commodities for a while now? Is this just about the war, or is this a trend that you see that people will park their funds in commodities post the Russian-Ukrainian geopolitical tension too?
Well, war always makes commodities go up. Whether we just read history, you'll know that for many reasons. That's when, and I expect this war to be over or calm down soon. But and that will make commodities correct, and then I will buy more because I can see there's going to be more inflation, more money printing in the future. And if you own the things that go up in price, you make money. When the war calms down, and we know that central banks are not going to be aggressive, yes, stocks will do well too. I expect one big rally in stocks after the war is over, but I also expect over the next few years a bigger rally in commodities. I will probably sell my stocks in the big blow-off rally and buy more commodities. And I don't have any shorts now. I'm not short any stocks, but in this big rally, if it comes, I will start selling short stocks again.
Okay, so you are going to sell more stock in the next rally and buy more commodities. Jim, you also said that's the way it's going to be because of inflation and more printing of money. So you're saying that forget the fact that whether interest rates will go up, when is that going to be? But you're convinced that we will continue to see bazooka after bazooka from central banks?
Well, once the war is calmed down, markets will go up, and partly because we don't think the central banks are going to get aggressive raising interest rates for a while. But we'll have a big rally. Then the central banks will say, well, wait a minute, now there's big inflation coming back. So then they will start having to raise interest rates again. And that will be, in my view, that will be the end. And then stocks will have a long bear market, but commodities will do well because there's supply shortages.
Jim, what about the outlook when it comes to lithium and copper, largely on account of the demand for electric vehicles, which has picked up globally?
Yes, electric cars use much more copper and lithium than petrol cars. I mean, it's simple, and nobody's been opening copper mines in a long time. So when you have shortages and big demand, it leads to higher prices. And you have money printing as well, which makes people worry about the value of the money.
You know, we've been tracking as well what's been happening in the bond markets, and I wanted to know what your outlook is on bond yields. Do you believe that they're in bubble territory right now?
Bonds are definitely a bubble and nearly everywhere in the world. Interest rates have never been this low in the history of the world, never. We've had so much money printing and borrowing by governments and central banks. I would not buy bonds unless it's a special situation somewhere, because bonds are a bubble. We have never in the history of the world had such low interest rates.
So Jim, going by the way you have predicted the next market cycle and what's going to happen post the war and continued excess liquidity, more printing of money, then could a corollary of that also be that once again the FANG stocks, the tech stocks, what we see on NASDAQ and across the world will again go up post this correction?
The U.S. stock market has been going up for 12 years now, the longest in American history. We've had a big bull market. That doesn't mean it cannot go up another 12 years, but it never has. And in my view, inflation will come, interest rates will go higher, stocks will get extremely overpriced because of enthusiasm, and that will lead to a big bear market, the worst in my lifetime. We had a big bear market in 2008 because of too much, 2008 and 9 because of too much debt. You know that debt is now much, much, much higher all over the world, everywhere. Everywhere, debt has gotten higher than conceivable. So the next bear market has to be a very, very bad bear market. I'm not trying to scare you or anything. I'm just telling you a few facts. And with debt so much higher, go back and look at 2008, 2009. Oh, it's much worse now, much worse.
You know, what goes up, they say, does come down. Is the point is what velocity, with what intensity. So you're of the view that it's going to be maybe one of the worst bear markets that we've seen. You're drawing parallels with 2008 and the great financial crisis as well. And you're stocking up as far as commodities go, but really that bad? Because the world will also show recovery. We will be out of a pandemic. Governments around the world will be investing.
Yep. Well, if you think there'll never be another bear market, that's wonderful. In Washington, they say, don't worry, we'll never have another bear market. We have things under control. I know that they're liars. Either they're liars or fools, because I know we've always had bear markets and we will have another bear market. And when it comes, it's going to be very, very bad. I don't know when it's going to come. I would suspect in the next year or so. Watch ET now. They will tell you. But I promise you, we're going to have more bear markets, and the next ones are going to be very, very bad because so much debt.
Bear market, and forgive me if I'm harping on the same point. What do you believe would be the prudent strategy for investors across asset classes, not just equities? I know you're saying do your homework and look at asset classes that you're comfortable in, but it is an awfully choppy market and no one wants to get their fingers burnt.
I repeat, invest only in what you know. What I'm investing in for the next bear market will be agriculture, commodities. I will sell short in the next, not now, when things get really hot again, I will sell short for the first time in a long time, and I will own commodities. And maybe I will own, I don't know, Russian shares or something. Right now, people hate Russia. But I always like to find things that, I don't know if I'll buy Russia, but I will try to find things that are depressed when the next bear market starts.
What's the view on property, maybe real estate, even when it comes to India?
Well, you know as well as I do that India property is in a bubble. I mean, at least from what I read. I don't own any Indian property, but I read that Indian property is in a bubble. New Zealand, Korea, a few places around the world. And I read that Indian property is very, very expensive and probably a bubble. But remember, when interest rates go higher, which they will in the next foreseeable future, that will affect property everywhere, because if you own property and your interest rates go higher, it's very difficult.
So if interest rates do go higher, we could, of course, start to see flight of capital. It has begun in a sense, right? We've started to see foreign investors, how they've been selling when it comes to the Indian equity markets. So when that does happen, what will happen to the outperformance of the Indian markets, the straight line rally that many of ET Now's viewers had gotten used to? But how do you see that panning out? The premium that India has been commanding.
Well, India has been a fabulous market. You're right. You know that better than I do. But history shows that when you have a big bull market and then a bear market, the things that have been the strongest will usually go down the most when the bear market comes. In America, things like Amazon and Apple go up every day. Those stocks will go down, at least history would say, those stocks will go down a great deal when the bear market comes, because they've been so powerful in the bull market.
Jim, you're saying you're not trying to scare us, but you are already talking about a bear market. would you say that we are towards the end of this bull market? The bull market is still intact?
Well, the bull market, I'm going to use the U.S. The bull market started in 2009, so that's a long time. That's 12 or 13 years. Yes, in my view, we have to be near the end of the bull market. I am not selling short yet, but we have to be near the end of the bear. It's never gone up this much in history. Stocks are expensive now. Interest rates are the lowest in history. Interest rates will go higher. Inflation will go higher. That has to lead to a bear market, and it's going to be very bad, especially for the things that have been hot, hot, hot. I would not buy Apple at all now.
Okay. Jim, what about the outlook as things are heating up when it comes to the US dollar, owing to the kind of comments as well that we've seen from the US Fed chair? Where do you see the dollar index headed?
Well, I own US dollars partly because when turmoil comes, people look for a safe haven. They think the US dollar is a safe haven for historic reasons. But what's happening with the US dollar now is the end of the US dollar, because an international currency is supposed to be neutral, but that Washington is not playing, they're changing the rules. Now, if Washington doesn't like you, they put sanctions on you and you cannot use US dollars. So many countries are starting to look, and they should, starting to look for a competitor. China, Russia, India, some countries, Persia, Iran, Brazil, some countries are starting to look for a competing currency, and they should, because Washington doesn't play fair anymore. And of course, the US is the largest debtor nation in the world. So for fundamental reasons and political reasons, people are looking for a competing currency. I don't know what it will be yet. India, China, etc., are trying to find a competing currency. I hope I'm smart enough to buy it when you find and when I can. And I don't like saying it. I'm an American. I don't like to see what they're doing to the American dollar. But I mean, if Washington doesn't like you, they cut you off.
Jim, you know, an article that you gave to the Economic Times about a year ago in January, you spoke about advice that you'd give your daughters, and you said that, you know, it's important to save money and money needs to be saved and not spent. And I'm sure there are a lot of young people as well looking up to you right now, watching this interview. What advice do you want to give them? Because I believe you said you believe it's a terrible time to be young. Why is that?
Young American. I said it's not a good time to be a young American, because America's got this staggering debt. A young Indian is probably better than a young American at this point. Depends on the country. No, America's the largest debtor nation in the history of the world. The debt goes higher and higher every day. You know, I'm not going to pay off the debt. I won't be around in 30 years of something. But my daughters are going to have a huge burden left from all this debt. I remember 100 years ago, the UK was the richest country in the world. There was no number two. Then they went huge debt. And you know what happened? 50 years later, the UK was bankrupt. Unfortunately, I will not be here in 50 years, but my daughters will. And there's going to be a lot of debt, huge debt. And the US is going to change. The US position is going to change.
Okay, that's some interesting advice that you're giving. And what about, you know, maybe first-time investors into a choppy and volatile market like this? You know, given that you're saying that there is a bear market on the anvil, what would be your advice?
Be very careful. Watch ET now. Learn as much as you can about what's going on, because when you learn what's going on, then you will become worried. And when you become worried, you will start figuring out ways to protect yourself. And the best ways to protect yourself are to buy what you know. If you know about automobiles or fashion or whatever, that's the way you protect yourself. Or if you can, learn to sell short, because selling short will make you very rich in a big bear market. In the 1930s, the world had horrible problems, but some people came out of the 1930s very rich, the ones who understood what was going on.
Jim Rogers, before we let you go, you've talked about why it's going to be sad for your daughter who's going to have to watch maybe even her children struggle with America, repay all of the debt that we have seen it raised in the last couple of years, and an alternative to the US dollar index. Can that ever be cryptos?
Well, it could be. Many people I know have made a lot of money trading crypto, not me, because my view is that and the bulls say that crypto will be the new money. My view is that, I know that every country in the world is working on computer money now, including the US. And if the US has crypto money and the US says, okay, this is now money, the US is not going to say, but if you want to use something else for money, you can use that other money. No, governments like control, governments like monopoly. I don't like it, but that's what governments do. And I just suspect that they will either tax it or regulate it or outlaw it or something, because they don't want to lose control. Governments don't want to lose control. And therefore, they're not going to let us do what we want. I prefer to be able to do what I want, but that's why I'm not in government.
Okay. With that, Jim Rogers, thank you so much for joining us today. So much volatility, so much uncertainty, the unfortunate war that we are seeing, the kind of headlines that we're getting. Great to have you on the show today in the midst of that big commodity run-up that we're seeing across from food to energy to metals. Jim Rogers, it's been an absolute pleasure. Many thanks.
Well, let me just tell you again, as you know, India is one of my favorite countries in the whole world, so I hope I can see you in person before long.
Well, borders are opening, so let's hope we can actually all meet in person. Thanks a lot again, Jim.